Thank you guys very much for joining us today. I really appreciate you coming out on a weeknight to get educated on something that I personally have witnessed to change people's perspective of what can create financial freedom. I've been investing in rentals out of state, out of my hometown for the last 10 years. And I've been able to help a lot of people do the same thing and develop a good cash flow stream associated with rental properties. And my market that I live in doesn't really give me the opportunity to do so. I live in Southern California, and as many of you guys know, the rent to price ratios and the economics here in the Southern California market, along with the tenant landlord laws, don't make it very feasible to do so and create a high enough return to be able to retire off of. So I'm here tonight to kind of share a little bit about what we do, as well as how to get started investing in an out-of-state market and what kind of due diligence to do, what strategies to implement. And so we will be going over some different strategies and how I've analyzed different markets around the country to determine which markets are, the best to invest in. So, or some of the reasons why I invested or chose different markets so that you can choose which markets you're interested in investing in as well. Giving you a little background, I am a California licensed CPA. I went to UC Santa Barbara and graduated in economics with an emphasis in accounting. So I will just admit that it's fun in Santa Barbara. You had to go to the library to study because all your friends are partying during Dead Week. So it was a great experience on the accounting side and the school side. And got my went afterwards into private practice with or public practice with different CPA firms to get that accounting and audit experience and taxation experience. So since I've quit my CPA firm about 10 years ago, a little over that now, we've flipped a little bit over 500 properties. We're buying about 5+ a month right now, and I've raised personally over 45 million in private investor capital for these flips and for holds and different strategies that I implement. We also manage a 200+ unit property portfolio of single family and multifamily properties out in the Memphis, Tennessee market. And we own a renovation and a property management company and real estate brokerage on the ground in Tennessee, mostly because that's where most of our assets are. And we want to be able to really be efficient and run our properties the way we want them run, given our investment goals. And we want to put specific efficiencies in place to do so. My experience, I do a lot of real estate taxation, or I used to. I help a lot of investors on that side now. I understand commercial and residential investment analysis, loan consulting, property management consulting, because I run a management company and understand the challenges and the pros and cons of doing so. Cash flow and market analysis, the legal and deal structuring is probably one of the most important skill sets you can learn as a real estate investor, is understanding what entities and how to structure a deal where everybody gets paid and it's a win-win for everybody involved based on what they're bringing to the table. So that structuring component, I think, is one of the most important things you can learn. We also do a lot of educational events and seminars and webinars. We run a real estate investment club called For Investors by Investors that is a nonprofit organization that teaches financial education and real estate education without a sales pitch involved. So we have a lot of education that we throw there. And then we do different real estate syndications as well, where I raise capital for different syndications and invest in them myself. And so we have a lot of experience in that field too. My accounting experience before I got into real estate, I actually got to work for some different CPA firms where I would go in and audit their financial statements for very large multifamily buildings where they were getting government subsidy. I got to see the inner workings of business as a whole and understand, how to actually structure a business to mitigate fraud risk factors and put proper internal controls in place for different companies. So that is my primary skill set. I was doing that for 8 to 10 years before I quit my CPA firm job and went into real estate full time, which I kept a good knowledge base of the taxation and taxation side of things and the internal control side. That being said, what we do now is we basically buy houses and we buy multifamilies and we invest in promissory notes and outside syndications. Like I mentioned, we like to have a variety of different options that we invest in and our investors invest in. And we add value through that renovation, that operations efficiencies, through really, really proper property management, proper leasing, due diligence, and that investment planning side of things, where we really analyze an investment to its core on the financial side and put in specific operating efficiencies to make these things run like a well-oiled machine. Now, as you guys know, well-oiled machines in real estate still have hiccups. And so if you're investing, you want to allocate reserves aside for those hiccups. They may not be on every one of your properties. They may be on none of your properties, but you still want to allocate money aside for those headaches and put reserves aside and understand that there's fluctuations in real estate. And I think that's really important for most investors to understand. It actually can provide a great passive cash flow stream, and how passive it is depends on the property management that's in place. So you still have to actively manage the property managers when you're investing out of state or investing in different areas. I would even consider something that's an hour away from me, possibly out of state, or something that needs active property management involved in it. And so your job as an investor is to manage the managers effectively and show them the way you want your property to be managed. There's a number of circumstances that I know about where people have just kind of let the managers deal with the property, and then it goes downhill because they're not paying attention and they're not knowing what's happening on that property. So very important to understand these different aspects of what's passive versus active when you're dealing with rentals out of state. So support services, we do a lot of investment and goal planning for our clients, where we help them with their overall strategy, their tax planning, and their entity structuring. And we also have a bookkeeping company that we can help with that aspect of the investment if the investments get big enough. We help manage property managers. We teach about these things, and that ongoing support is crucial to a lot of our investors' success. So we give them feedback and guidance along the way. Even after they've invested with us for years, we continue to meet with our clients and talk with them about their goals and what things are working and not working within their portfolio. So today we're going to talk about cash flow investing goals, what the specific purpose is, a market analysis. How do you analyze a market when you're determining which markets to invest in, how to build your team and what that team looks like, the different investment strategies when you're investing with out-of-state rentals, and then finding the right deal and then working with us. So finding the right deal for you may look like a lot of different things, but we're going to go over some examples and the numbers on these things and really kind of determine what are the pitfalls and the pros and cons associated with investing in out-of-state real estate. It's a different animal in itself. You are much more reliant on your team, and so your team is the most important aspect of your investing, unless you're buying in the ghetto, in which case nobody can help you. So I would suggest first thing is don't buy in the ghetto. Cash flow investing goals. Okay, so I want to kind of go over the overall plan here. The plan is to cover every single one of your monthly expenses, including savings, and more than your monthly living expenses in cash flow. And why do I say more? Why, if you have $6,000 a month in monthly living expenses, which I understand if you're living in Southern California is probably a little light, and why do I say you need $10,000 a month in cash flow from your investments? It's because of inflation. You need to constantly be reinvesting additional cash flow into more cash flow to keep up with inflation and keep that going consistently. So you are now an active investor. No more putting your money in Fidelity or Schwab and letting it sit there and hope it goes up or down. When you're a real estate investor and you're investing in different markets around the country, you need to understand how your investments work and take control of your own investments. But when you do this, you can create financial freedom for yourself much more effectively than just putting your money on the side and hoping it goes up and having a money manager deal with it for you. So what is the problem is these old investment methods, investing in mutual funds, CDs, stocks, bonds, and money markets, don't work. They're not producing a high enough cash flow stream for you to actually retire off of. So here is the actual chart. Out of the retirees of the 65 and older, 1% is self-sustaining. A good chunk of them are still working. 52% are dependent on charity, and 31% are dependent on relatives. So we have a big problem here with the traditional methods, and it's because these big investment companies that control your money make money off of you whether you make money or not. If you look at the long-term average of stock portfolio gains, not including inflation adjusted over the last 20 years, you're looking at like a zero gain. So you want to be really, really careful how you invest and start controlling your money instead of letting these big investment companies control your money for you, where it doesn't give you the entire retirement that you're looking for. Don't listen to the financial planner's advice that says you need $1 million to hopefully last you until you pass away and die broke. You want to be able to have your cash flow stream from your retirement covering all your monthly expenses no matter what, and die wealthy and pass on those savings to your kids. So it starts with personal budgeting, though. I can't stress this enough. You do not know where you're going unless you know where your starting point is. You cannot begin to cover your monthly expenses with cash flow until you're tight on your budgeting and know what you're doing on that side. So you want to track every single dollar you spend on a monthly and annual basis. Now, this seems like a big task, but you're probably talking about a half an hour a week of time. If you really think about it, if you don't want to be working 40 plus hours a week anymore, then spend the time on the budget to do that. It's really, really important. And I'd say 95% of people that I know don't do this. And that's the problem why we have a big chunk of people that are not financially independent. Okay, you want to look at what your budget is versus your actual. So I have a budget template that I can share with you guys if you're interested, and you can write down what you feel is the actual, and then or feel what your budget is, and then you write down what you actually spend because they're always different. Okay, so plan for those larger expenditures, those cars, those kids' colleges. Put those things aside. Tracking all of your documents and your credit cards and your bank statements and your cash. That's pretty much everything that you have to track. Okay, and you can track it through QuickBooks or Quicken, or there's a really cool software called mint.com that will link to all of your different credit card and bank statements, and they will automatically download all the transactions right into categories for you. You probably have to tweak it for 10-15 minutes a month, and that's about it. So it's really, really great for understanding where you're at on a general scale with regard to your finances. So also, you want to know what your personal financial statement looks like now. Where is your starting point? And then plan for taxes. Very, very important. That's your biggest expense, to structure things where if you could save 20% or 30% or 50% on your taxes, it could be substantial. So you want to invest in ways that will reduce your tax withholding and your tax cost, but that at the same time structured in a way where it's at maximum efficiency for you on the investment side. So let's talk a little bit about what to do when you're first starting out in a market, in a new market. What things to kind of look at as far as the market goes to determine if it's a good market to invest in the first place. Because, that's kind of a scary thing. There's so many markets out there that you can choose, so many different locations that you want to be really careful where you buy. You want to understand the market as much as possible before you go in, okay? So the first thing that you can look at is the rent to price ratio in the market. So in a market like California, you have a very, very bad rent to price ratio, meaning it costs you a lot more money for the same amount of rent, meaning that you will make a less of a return on your investment if you actually went through and bought a California property with all cash versus many properties out of state. And so that's a lot of the reason why a lot of you guys are on here, is you realize this, that it doesn't make sense financially here in California a lot of the time. Sometimes it does. It depends on the deal involved and how much value add you're going to put in place. So also, what is the affordability rate in that market? How affordable are those homes for homeowners to buy based on the income in that area? Very important to understand. What does the volatility look like in those areas? So when you're dealing with volatility, what does the housing prices do during the busts and the booms of the crash? Does it go like crazy like California, up and down, where you can get some great upticks in that appreciation, but you can also take some big crashes too. So there's a lot more volatility in a California market versus some other markets around the country. What does the job growth look like in that market? What are the state and local governments doing in that market specifically? What are they? Are they pro-business? Are they changing laws? What are the different things that are going on with the state and local governments? Are they broke? What are the tenant landlord laws in that state? So, for example, in Tennessee, where I invest, the tenant landlord laws are very in favor of the landlord, meaning we can actually get an eviction in 2 weeks and get them out within 10 days. So very quick turnaround process. In California, it can be very quick as well, but sometimes it can take a really long time if you have a tenant that knows what they're doing, or if you do anything wrong with regard to communication or any issues there. Profitability and cash flow. So you want to run numbers and run numbers and run numbers on multiple properties in multiple segments of the area, higher end, middle tier, and lower end properties to determine, what do those numbers look like in the overall market. With property taxes, insurance, and things like that as well included. Neighborhood analysis. Like I mentioned, do not buy in the hood. You have to know where the good neighborhoods are. The bad areas, you have more vandalism and theft, more tenant turnover. The tenants don't take care of the property as well, and you can have major issues in some of these low-end areas. And I know because I've bought them and I've lost money on them. So when you hear these types of things, it's because I've gone through it, and it's a headache to deal with. What does the housing price index look like? What have housing prices done over the last 20 years? And what is state income taxes? In California, you have a maximum tax rate of 13%. In Tennessee, there are no state income taxes if you own property in your own name. There's no personal income taxes. There's a franchise and excise tax if you own property in an LLC, which can be avoided with a Tennessee LLC. So these are just some of the things that you learn and pick up as you invest in the market. So this is a chart from Fred.com, great place for data, on California versus the Memphis, Tennessee Housing Price Index. This is basically, if you look at the blue section, you can see the volatility of the Memphis market is much less volatile than California market that you see in red. And that's one of the reasons why I invest there. I want to invest in a high cash flow market with low volatility, because I don't want to try to time the market and think that I can understand the market well enough to be able to ride up these upticks and these down and the downturns and sell at the top of the market. And so you can do that, and I think that's a good idea once you have all your cash flow covered, or all your monthly expenses covered with cash flow. Then go to those riskier plays where you can play with the housing prices and try to go and take the upswings and get out at the right time, because then it doesn't hurt you as bad. So population growth, also Fred.com. This is the Memphis metropolitan area showing a steady population growth. You want to look at this in comparison to other markets as well. The unemployment rate and across the nation as well as in Memphis, you can see here that it pretty much mirrors the entire market. This is the housing price index, or the rent to price ratio in different markets in the U.S. So you can see San Francisco here, for every $1,000 in rental price, that's what the home price is. So if you take the 45.88 and you take 12 months of $1,000 times 45.88, so it's $12,000 times the 45.88, you get $550,000. So it's basically your price with $1,000 monthly rent. Okay, so it takes in San Francisco $550,000 to get $1,000 in monthly rent. Okay, which is crazy high. So you see Los Angeles right here, it takes $456,000 for $1,000 in monthly rent. Long Beach, you're looking at $415,000. We have Seattle, you're looking at $421,000. So very, very low rent to price ratio, meaning you don't make as much in interest or cash flow from the rental income for your purchase price. Anaheim, another $375,000 there. So we also see here Atlanta, Georgia, typically known as a good investment market, $275,000 for $1,000 in rent. We have Santa Ana, $303,000. And then we have here Phoenix, Arizona, $243,000. And then Nashville, Tennessee, $229,000, $230,000. And then Dallas, Texas, a better cash flow market, 194,000 for $1,000 in rent. And then we have Memphis, Tennessee, which is an average of 147 for $1,000 in rent. So a very high rent to price ratio. You have some other ones in here: Pittsburgh, Buffalo, New York City, or in New York, and then Cleveland, Ohio, and Detroit that have higher rent to price ratios. But they have, Detroit, for example, has some additional economic issues to deal with, which hopefully they'll be coming up soon. So, but these are some of the things that you want to look at when you're looking at the rent to price ratios in these markets. So let's talk a little bit about your team members that you need in place, okay? Now I got the A team here because there's definitely the B team and C team and D team and Z team all over the place, and it takes a lot to get the right team members. I went through so many different team members. This is probably the biggest learning curve you have when investing, is your team members in themselves. You can have great numbers on properties, but if you don't have good team members, your investment's dead in the water before you start, especially if you're investing out of state, because you're relying on them to manage your investment the way you would. Okay, so brokers and bankers, very, very important. You want to have these types of resources. It helps when you're trying to do a fix and flip, or trying to actually go through and do a buy and hold and refinance a property, or hold it long term with bank financing at really good rates. Right now you have, we're looking at around 4.5 to 5% rates from bank financing right now, given the current rate hike that just recently occurred for investment property. Private lenders, very important for these flips. There's certain properties that these banks will not touch until they're fully rehabbed. So you want to have these private lenders available to help you renovate these properties. And that's because these brokers and bankers aren't set up to actually handle renovation loans. There's actually professional private lenders out there that do nothing but that. Affiliates, very, very important. Who's going to help you find properties and that type of thing on the ground? Insurance agents, very important. You want to make sure that your insurance agent understands what should or should not be covered. Our insurance, we have a $2 million general liability policy with 12 months of loss of rents. If there's a issue with that property where the tenant has to move out, we actually get paid for the rents. We have dog bite coverage and domestic violence coverage. There's a lot of great things here that we have on our insurance side over time that we've learned to add. Have a good CPA in each market that you do business in. I can't pretend to know the laws in the state of Arizona, for example, if I'm a California CPA. Yes, we can look that stuff up, but unless you live in that state, you have a lot less practice with that specific state. Attorneys as well, and you want to have different attorneys for different things that you do. We have an eviction attorney, we have a closing attorney in Tennessee. It's closing agents versus closing agents in Tennessee are attorneys, versus in California they're just considered closing agents. They're not attorneys. And so you want to have a different attorney for legal structuring, for example, for your business as well. Realtors, very important to understand investor-friendly realtors that can provide you the right data and not try to make things look rosy and pretty. You want them telling you the truth. Inspectors, very important. I go through with my inspector on every property and try to understand what things are going to cost on these properties to make sure that I understand everything that the inspector sees. And then at the same time, I make sure that my inspector's reports are adequate first. So they should have pictures and video, or pictures and description in those properties, and or in those inspections, and they should be able to go through that with you in detail. Selling and buying agents, important. Appraisers, bird dogs, contractors. Appraisers are really, really important. You want to be able to find an appraiser that understands the market very, very well and can teach you what they see on the market and why they price things certain ways. All these different team members should be educators for you. So contractors, very, very hard to come by good contractors. It took us tons and tons of good contractors to go through to find good ones. And so on ours now, we control 100% of the materials. We don't let any of the contractors deal with that. We have them price labor out specifically, and then we don't pay them the remaining portions of the labor until 100%, including the punch list of the jobs are done. So that way we can continue to have them coming back. And we have multiple so that we can give other people jobs if certain people aren't performing and cut them back. Property managers will make or break your entire rental portfolio investment. So property managers are everything, and we're going to talk about the property managers a little bit later on as well. Financial advisors also very important for that tax and legal structuring and your retirement account structuring. I invest in my own 401k into real estate. You can self-direct it into real estate as well. And so having a good financial advisor that can tell you how these different things work and help set the structures up for you and understand the costs involved and the strategies is crucial to your long-term investment success. So you want to look at this as an entire whole, not as just one piece here and there. Okay. So property management, again, like I mentioned, very, very difficult to find good management. We went through 5 property managers before starting our own company and working with one other one that we have a substantial amount of influence over because of the amount of properties we have with them. So the first thing you want to look at is the contracts. I see things in there saying the manager has the exclusive right to sell the property if you ever want to sell the property, which is complete hogwash in my opinion. You should have the option of being able to use them if you want to. So monthly fees, do they get paid if they are vacant or not? Sometimes they do, and that's a complete disincentive and conflict of interest between the manager and the owners of these properties. So very, very important. So and then we're dealing with references. So you want to be calling different property or different owners of these that have worked with these property managers if you can, to understand how they've been performing for them and understand that aspect of things and get those references. So I got a question here. What is a bird dog? A bird dog is someone that finds you properties or brings you resources. So both of those things I think are really important to have as a resource. We pay people bird dog fees. They're like other wholesalers or other people that are finding us properties, or even realtors can be bird dogs, where they're out there looking on the streets, finding vacant properties for you and finding different resources for you as well that can bring them to the table. Managed properties on the property management side. How many properties do they manage? Do they manage 2,000? Have they just took on another 1,000 properties and their efficiency is going to go down in the near future? How many are they managing? How big are they? How big do they want to get? And how do they handle the infrastructure on that as well? Monthly statements. Do you understand the monthly statements? Are they clear and concise to you? You can ask them, the property managers, for examples of these monthly statements so that you can get a good understanding. And then at the same time, you want to be able to go through and understand the accounting aspect of this and how they do it, when they process payments out, and how the whole process works along with the accounting side. Do they have experience with the laws and the different liability issues in that state? So understanding those things and understanding what you can and can't do with when you're trying to kick a tenant out or you're dealing with a tenant and sending them notices. Do they understand what they can and cannot do? And have they gotten proper advice from the eviction attorneys on how to do it? Additional costs. What other things do they charge you for? Do they do markups on advertising costs? Do they do markups on repairs? What are the other fees involved in the property management company? And so, a lot of times people charge $200-300 for a lease renewal. I can understand something like 50 or 75 bucks for having to go out there and do that if you can get an increase in rents for doing so and taking the time to go out there and get that done. Most property managers charge some sort of a fee there. Some property managers will charge you an accounting fee and a marketing fee and a lot of other little costs there that add up over time, and you want to understand those things. We don't charge any of that stuff because I don't think it's right to charge those little costs. Are they paid if they're vacant, just like I talked about? Do they have markups on repairs? Many times, if they hire people in-house, it's okay to do some sort of a markup to cover payroll costs and things like that. And in addition, if you hire someone outside, it's okay to do a small markup from a property manager to cover the administration costs associated with that specific repair, traveling out to the property, inspecting it themselves, doing all that aspect of things whenever there's a repair. At the same time, sometimes you see them trying to charge substantial amounts of money, and that's not something that you want to look for. You want to look at just them covering costs and not making money off of you on those things, because you don't want to incentivize them making money off of your repairs. Advertising costs we talked about. Cheapest is not always the best. I've seen some management companies at 6%, but they don't do anything for you. They do a smaller amount of money or a smaller amount of services for that money. And so like we typically charge 8 to 10% in the Memphis market, but you know, in California it might be 6% because the rents are $2,500 to $3,000 or more, versus in Tennessee they might be $1,000, and it takes the same amount of time to manage that property. And so most management companies I see are anywhere in between 8 and 10%, depending on the company and how many properties you have managed with them. Multifamilies I see in the 7 to 8% range, depending on the property. Proper communication. How do they communicate with you? Our management company specifically has a building and property management software that we use, where we can set up our clients on automatic notifications for any repair, any service call from the tenant, any payment of deposit of rents and all that kind of stuff. They can be automatically notified. What management software do they use? We use Buildium. There's a couple of other ones out there that are reasonable as well. Collection procedures. What do they do? What we do is we go through, and on the 6th of the month, we start making phone calls immediately, because it's due on the 5th and late on the 6th. So we start making phone calls. We send an email and a letter out immediately. If we can't get a hold of them right away, then we continue that collection procedure. If we can't get a hold of them within about a week, then we start the eviction procedures on them, and that usually gets their attention, getting a notice on the door. And then you know, you go through this process over and over again. You try to work with them because you don't want turnover, but at the same time, you have to continue to move forward as long as you haven't gotten paid. Leasing procedures. What are the different strategies they use for marketing and on their leasing? We use pay-by-click marketing on Facebook. We use every online site you can possibly think of. We have our rentals on, and Zillow syndicates to a bunch of different sites as well whenever we're trying to lease our properties. So how to protect yourself, okay? So I think protecting yourself is one of the most important things of all of this. You know, we talked about the team and the property management and the importance of that stuff. I think I hammered that home. But protecting yourself comes in different forms as well. So like I said, doing that neighborhood analysis is the utmost importance, okay? Do your market value analysis, your rental analysis on the property. So we do all this stuff as a property management company and flip company, because we won't be able to sell them for that, and our investors won't be able to get bank financing if we sell them for too much money. So because they want to appraise out. And so what is the renovation analysis on the property? What is the cash flow analysis, and are you comfortable with those figures? What is your insurance coverage, and is it enough for you and your personal financial situation? How is the property management set up to protect you? Look at those inspection reports on each property. Look at the tenant qualifications and understand what the management company is using on the qualification aspect. So for example, we go through and make sure our tenants need to make 3 times the rent, or they don't qualify. Any judgments or evictions that are recent, they are not qualifying. They have to have a minimum credit score, and we have to take their entire situation as a whole to determine if they're going to qualify or not. A lot of this can be very subjective and difficult when you have someone that's on edge. They might have just gone through a recent bankruptcy, but at the same time are really strong financially and have a great job with great income, but they just hit a snag with major medical bills or something like that occurred. In that case, you may say it's okay that they had a bankruptcy, they have no debt anymore, and it was all due to medical issues. Equity protection versus higher leverage. You know, so sometimes people opt to get that higher leverage versus putting more money down and feeling more comfortable with a bigger cash flow spread. Planning for those major expenditures. And Every roof has a 20 to 30 year life. HVAC systems can have a 15-year life. Water heaters can have a 10 to 15-year life. Sometimes they can last 30. Usually the new ones last about 15 years. But you want to plan for these types of things and have an allocation of a capital expenditure set aside for those items that will come up in the future. And then have proper documentation involved with all of your stuff, with every receipt. What we do is we upload every single receipt directly to our management software, so our investors can see all of that firsthand and see the direct receipts associated with this, plus the direct materials that were purchased. So let's talk about some of the investment strategies that I think are really, really important for for this type of investment. And I think looking at the different strategies, there's a ton that you can be doing here. And I think it's important to understand the different types. Okay, so the first thing is wholesale and refinance. A lot of times investors buy property from us, and we will wholesale a property to them, make a smaller amount of money up front, but then again they buy it with cash, and then they refinance from us, and they get a really good deal for doing that, and they can capitalize the renovation costs separately and even increase depreciation that way. Cash acquisition. A lot of investors want to buy a property with all cash because they don't want to deal with the financing, or maybe they can't deal with the financing. They don't have the capability of doing that. So some of our international clients will buy all cash, for example. Bank finance acquisition. So whenever you buy a property, you can also buy something with bank financing involved and use the cheap bank leverage from many national and local banks that will provide you that financing for 30 years. And on multifamily properties, there's a lot of different strategies to utilize, but the bank financing usually has a balloon of around 7 to 10 years on it with a 25 to 30 year AM. So you can also buy properties with seller financing. So we provide this to a lot of our international clients that don't have the option of getting US financing. So we'll go through and finance them with 50% down and be the bank and say, okay, now we have some promissory notes that we can sell off to our investors, and we get recapitalized by selling those off, or we just hold the cash flow as well. So these are some of the different strategies we implement to sell more properties. And so you learning seller financing can be one of the best tools that you can use when you're investing yourself as well. The great way to exit a property, especially to homeowners and things like that. Joint venture cash acquisition. So we deal with a lot of different joint venture investors that partner with us at our cost. And then we take a 25% split of the cash flow, and then 50% of the property of the profit whenever we sell it. But we bought, renovated, and tenanted a property with our own money, and then went through and provided built-in equity on that property as well. So, and then we also deal with joint ventures with bank financing too, where an investor will get the bank loan, put 20% down or 25% down at our cost, no markup. We're not making any money up front, and then we split in the cash flow there as well. And then we have different multifamily properties too that investors can invest in depending on their situation. So here's an example of one property that we did previously. This one's already sold, just giving you some basic numbers to some of these things so you can understand. I'm a CPA, so the numbers to me are everything. So you can buy this with cash, bank financing, seller financing, and joint venture. I actually sold this one to a cash investor internationally. So this is a 2,000 square foot, 3-bedroom, 2-bath, $1,075 a month in rents property. Okay, it's fully renovated and tenanted and turnkey, ready to go with all the preventative maintenance done for 10 years. And so we're looking at rents minus a vacancy allowance, minus management, taxes, insurance, and repairs, and it nets about $675 a month in cash flow with an all-cash investment. Okay, so that being said, we have a $116,000 purchase price if they're buying it from me with bank financing. Okay, with $23,000 down as 20% down. They're netting $675 a month with a 4.75% rate. Their monthly payment is $484. They're netting about $191 a month plus about $1,400 a year in principal. So they're making almost $4,000 a year on a $23,000 down payment, which is about a 9.88% in cash flow and 16% overall return on investment here. Option 2, buy it with cash. You make about 7% on your money buying it all cash on a property like this is fully up and running and cash flowing. Or with seller financing with 50% down, they'll typically make just under around 7% on their money. They're putting about $59,000 down, and it's usually at about a 7% rate. And the reason why the rate is a little high is because I basically go through and raise private investor capital on these loans to be able to do that. And so to be able to put these seller finance strategy investments together. Okay. Let's talk about our property packages. Whenever you actually invest, you should be getting these types of packages too. So before and after pictures and video, a property layout, okay, comparable sales and rents. That we do a full disclosure checklist of the age of all the appliances, the major systems in the property. We do a full inspection report with a side-by-side report showing everything done in that property side-by-side compared to the original inspection report, so that our investors know everything is done on these properties. And we give a full layout of the property and everything on these things, with providing the rehab estimate and the financial projections all ready to go for our investors. And so our property packages come with comparable sales and comparable rents. Then they come with our disclosure checklist. You can see here we have the rehab completion date, the inspection reports, the roof, if we have a roof certification, the mechanical systems and when those were replaced, the appliances, and then the tenant, the move-in date, and the the deposit amounts. That's one thing that we do on our properties is we get a full month's rent plus $5 in security deposit. It changes their mentality so they don't think it's part of the last month's rent associated with this. A little trick that I picked up that actually tends to work pretty well. So, and here's an example of a joint venture property that actually we just have a joint venture partner on. And so this is a 75-25 split with the investor, 50-50 equity split. We manage our joint ventures at 8% versus 10% if you own it yourself. And then we have a 10% plus cash flow investment stream on this investment. The investor gets the depreciation benefits. OCG is the team member on this, so that you have someone that's managing the managers for you. So, and then we detail everything out for you and give you the splits and the monthly accounting and everything. And then we do not have a markup, like I mentioned. So, and we bought, renovated, and tenanted the property, and then the investor puts the down payment down and qualifies for the loan. And in our joint venture agreement, we actually are 50% obligated for that loan as well. So this is a 3,233 square foot house in one of the best areas of Memphis, built in 1995. It rents for $2,095 a month. So we're looking at $199,500, $39,900 down. It rents for $2,095 a month, which is $25,000 a year minus vacancy, managed, property taxes, insurance. There's no HOA and repairs. You're looking at about an 8.16 cap. And then with after our split, our investors are making about $4,700 a year in cash flow, which is about an 11.8% cash flow return. With the principal reduction in the loan, they're making about 14.89% on their money. And then you have tax benefits if you're trying to compare it to another investment as well. So we also have these multifamily properties. This is an example of one we just sold. We have a 30 unit, a couple fourplexes available, a 19 unit available. But right now this one is a studios and 1 bedrooms. It's fully renovated in one of the best areas of Memphis. I mean, this thing had everything: subfloors, windows, doors, the roof, the foundation, all plumbing and electrical. I mean, this thing was fully renovated from top to bottom, and it's producing a 9% cash flow return to our investor and 11% cash flow if you include the principal reduction in the loan. And we were able to structure a 1031 exchange for our clients on this deal. So finding the right investment for you, I think, is really important, because everyone is completely different and you have to understand your own risk tolerance level. So, you want to be able to go through and know where you're at in life, how much cash reserves you have. Can you deal with rental fluctuations, or should you be investing in a promissory note structure or a syndication structure that is a lot more passive than owning a rental property where you're reviewing the monthly statements, managing the managers on a monthly basis? So determine how much time you have to be active or more passive. Okay, and that comes down to flips as well. So the more active you are, the higher level returns you are, because you're getting paid for your time too. So what return are you comfortable with? Understand that. How are you aggressive in going to shoot for active returns, or do you want to be slow and accumulate cash flow over time to gain that financial freedom? So there's something to be said about holding a property long term for long term wealth building. Okay, so do you understand how you're protected on each investment? What are the specific protections you can put in place? Do you have the capabilities to use bank leverage? Meaning, will you qualify? How much cash resources have you allocated for investment purposes? And did you put proper cash reserves aside as well? Very important to understand. Do you have time or other relationships that can add value to you when you're investing too? What are your current cash flow goals and your monthly expenses to determine, what's specifically right for you, and what are you trying to accomplish? Should you be going for a multifamily with more cash flow, or can you start off with a single family home that you get cash flow over time? Develop a specific plan. So you want to come out with your 10-year plan, then break that down to your 5-year plan, your 3-year plan, then your 1-year plan, and work backwards and say, what do I have to do? How many properties do I need? How much cash flow do I need to get to where I need to be in 10 years or 5 years if you don't have as much time? So, and why turnkey rental properties? You can definitely go do this yourself. Absolutely do this yourself. You can. At the same time, you are going to go through the headaches of building that team. You're going to have those types of headaches, but you can make that money back, but it's going to be a lot of work when you go through those headaches and go through those learning curves, and those things cost you money. That's fine. That's a great strategy to use. But at the same time, turnkey providers like myself, as long as they're done correctly with the right renovation done, with the right property management, they can actually produce a higher return to investors because we've gone through this headache and we have this team in place. So, we have multiple property acquisition choices to choose from. We have really, really good renovation expertise. I mean, we break everything down room by room, item by item. We get things super cheap from Lowe's and some of our providers because we buy so many materials from them. So we literally have SKU numbers set up where it's all ordered online and set up in a pallet ready to go for that entire job. We have tenanting expertise and understand the market in that area, and who to rent to and who not to rent to, and understand what background checks matter, how to look at those types of reports, and that type of thing. Proven property management in place. You can talk to some of our people that we have are managing properties for, but that's very important to understand the property management. Neighborhood and market analysis. We know where not to buy. Trust me, in the very beginning when I went out there, I got totally duped, where they were saying, oh, look at this great neighborhood. Look at all these beautiful trees coming from California. And I can tell you that the trees were all that was beautiful about that neighborhood after dark. So be very careful about where you're investing and understand those neighborhoods in detail. Cash flowing from day one. We can set up properties already that you're cash flowing. If you buy one yourself, you're probably going to take 4 to 6 months to get that thing up and running, or especially if you don't have a system set up already. Risk mitigation. We understand the different risks that are involved, and we have systems and procedures set up to mitigate those types of risks, like proper insurance, like making sure our crews are insured, and we have proper insurance in place for the general liability side, and understand the eviction process and what you can do with regard to the laws in those areas. So we've done the due diligence already for you. We have the proper financing options for multiple different investors in place with regard to seller financing, bank financing, multifamily financing, private investor financing. We understand the state and the tenant laws in those areas and the liability issues. We understand the property repairs, and we're responsible for them initially. If any major issues come up, we typically take care of it 100% for our clients. We look at the inflation hedge associated with these turnkey rentals as well, where you are buying a property that rents increase with inflation, and the property and the loan payment stays the same. So it's a good inflation hedge for our investors. You get proper depreciation benefits, and we're actually working on a cost segregation study right now that will substantially increase the depreciation benefits for all of our single family homes. And then there's the abilities to leverage as well. So you have this leverage in place for our investors to be able to work with. So we have a lot of benefits from the turnkey provider side that I think is really, really valuable. So ways to work with us: you can buy single family homes with seller financing, with bank financing, joint ventures, cash, or get wholesale. You can also buy property packages. We've structured packages for investors on these things, especially if they're trying to hit 1031 exchanges. Multifamily properties, promissory notes, and syndicated investments as well. And then we also have an affiliate program. So if you're not sure how to work with us in one of these different ways, we have a great affiliate program set up for people that want to work with us more consistently, where we can actually go through and set up a system where they can give us referrals and work with us in different ways to find us deals too, where you can make money with us in different ways. So I'm looking at everybody's resources and trying to find ways to make money together in one way, shape, or form. So our typical process, we do a 60-minute consultation to understand your financial situation and where you're at and what your retirement goals are and your risk tolerance levels. Then we review different investment options, and it may not be with us. It may be, you're looking at outside investments, and we can help you understand what those risks are too for those outside investments not working with us. And that's totally fine. It has to be something that works for you specifically. And then you pick out an investment as well, and we're matching your resources and your specific requirements to your goals. And in this process, we do the due diligence and the quality control. We look at the risks and how to mitigate those risks for you specifically. And then we have you ask as many questions as you can. I actually had an investor just ask 85 questions the other day. It was great for my Q&A. So I mean, it was tough to answer, but at the same time, it was honestly refreshing to see somebody ask that many questions to get a really thorough understanding of their investment, that they're contemplating. So, and then we close escrow. We sign the contracts, look at the investment add-ons if you want any extras, look at the expected closing costs and the fees, the insurance, all of that stuff involved. Look at the closing documents and notarize them. And typically they get mailed to you or emailed to you, and then you mail them back or actually mail them back via a FedEx envelope, and you're good to go. And then it's just a matter of monitoring your investment, having it managed correctly with that property management company that you've already vetted in a lot of detail, and then repeating over and over and over again until you're financially free. I mean, this is the strategy involved here, is to constantly going through and buying more cash flow assets until you're completely financially free. And so what are your next steps to success? Not working with us, but your next steps for you personally is developing that strategic financial plan for yourself. So assessing your current financial situation, okay, your assets, liabilities, income, and expenses, reducing your expenses, including your taxes, which is your biggest expense, and looking at those expenses, setting up the right legal structures, and finding new ways of making money. I don't care if it's selling something on eBay every single week to create additional cash flow and additional investment income, or selling all your belongings to actually create cash flow for yourself, because we all know we have too many of those things. So, you can actually go through and create income in multiple ways that you haven't even thought of yet. So set the right financial and life goals for yourself as the next step. So you want to have a clearly defined aim. That's why I'm saying put your 10-year goal in place there, okay? So and you have to be thinking about it all the time. I can't tell you how many times my wife has told me to shut up about real estate because I can't stop thinking about it, or has moved my head towards her to listen to her because I'm thinking intently about some new strategy or something that I put in place or I'm interested in putting in place. So you also want to train yourself every single day and read constantly. We have some different audiobooks we can help you with, like Think and Grow Rich, The Law of Success in 16 Lessons by Napoleon Hill, Rich Dad, Poor Dad, How to Win Friends and Influence People. All great books that'll continue to train your mind every single day to constantly try to become better, okay? And you want to write your affirmations down, not this is the way I want to be, it's this is the way you are, and constantly be thinking about that type of strategy, okay? So basically, and then in addition to that, you want to work with different people and mastermind with the right people, because you want to have those same mindsets all around you at all time. So basically, we go through and have masterminds with different investors that have the same mindset. You talk and think about different things. The poor, middle class, and wealthy people talk and think about different strategies and different things in their life. So it's really important to associate with those types of people. So and really, I believe the more you achieve in your life, the more fulfilled you'll be and the happier you'll be in the long run. So it's like if you get up and go to the gym, it's really hard to do that, but after you get back, you feel amazing. Now, what if you did that every single day for a month? How great do you feel? And you're just giving up that temporary satisfaction of sitting on the couch, relaxing, and and not doing what you know you should be for that long-term satisfaction, because that temporary stuff fades, and then you have pain after that because you didn't achieve what you wanted to. So if you like this presentation and you think it's valuable, definitely refer some clients if you'd like to, or some different people that might be interested. We have some different investment clubs where we teach financial education and real estate education without the sales pitch. Our next meeting is, and it's called For Investors by Investors. And if you go to meetup.com and type in FIBI, you'll find all of our different chapters. It stands for For Investors by Investors. And the next one is actually tomorrow night on how to run your business so your business does not run you. And so I have a business coach that I used personally coming in, and another real estate coach that I personally used coming in to talk to different investors about how to structure their businesses so that you can set it up right from the start. And this is one of the best strategies that I wish I would have learned in the beginning, because it's so hard to be the business owner instead of the self-employed. And so we're going to do a Q&A and a roundtable discussion with the audience. We have a brunch and learn on Saturday down in Tustin. That is, if you go to meetup.com/learn-how to be a real estate investor with the dashes in between, you will see all of this event that you can sign up for as well. You can just type in learn how to be a real estate investor on Meetup as well, and that will come up too. And then the other one on Long Beach is meetup.com/for investors by investors for how to run your business. And then our last one that we have coming up, and we do this every single month as well on a consistent basis, is Did I Miss My Flipping Window? And that one is in El Segundo at the Point at the new Keller Williams office on the 15th of Wednesday. It's like $25 to attend these. We don't make any money of these. We pretty much break even. It's a nonprofit organization, but it just pays for the venue. And the one brunch and learn actually includes breakfast in the $25. So you really know we're not making any money on that one. So, but this is all specifically education based, where we're teaching about these different strategies. The last place is meetup.com/FIBI South Bay, and you'll find our different chapters there where we run reoccurring monthly meetings on different real estate related topics. So your next steps for success: email us or call us to schedule an appointment. You can email us at invest@ocgproperties.com. And you may not really know how you fit in this box with us, or maybe you don't fit in the box and you just want to talk about the different resources that you can bring to the table for us or work with us in one way, shape, or form. But if you let us know, I'm sure I can find that out. And I'm great at finding the resources people don't even realize they have. Okay, so it's best to email us. The messages will take a couple days to get back to you, but the email we can get back to you right away. Invest@ocgproperties.com. You can fill out a client intake sheet so we can understand what your situation is, compile what resources you have for investing, review the specific cash flow goals and monthly expenses that you want to cover, and then review the investment options, determine what types of investments are right for your situation, and start developing your cash flow stream. And then if you want to learn more, you can sign up at our FIBI For Investors by Investors to continue that education. I would keep going to these types of investment clubs so you can learn and take it all in. This is a time thing. This is not an immediate, automatically a ton about real estate thing. You can jump in and get rich. That's not the way this works. It's going to take a while for you to develop these cash flow streams. At the same time, it depends on how much resources you start off with. And even if you're starting off with a couple $1 million, that doesn't mean you want to jump ship into real estate and go crazy right away. You have to learn how these things work to mitigate the risk associated with it. Okay, so that being said, I'm pretty much out of time, guys. Thank you guys very much for your time today. I really appreciate it. So if you're interested in working with us further, please feel free to email us at invest@ocgproperties.com, and I'd be glad to talk with you further. So, and if you have any other questions for us, please feel free to reach out, and we'll try to help you out any way we can. We have a ton of resources, CPAs, attorneys, self-directed IRA companies that we can refer over to you for that help. So thanks a lot for your time, guys. I appreciate it, and look forward to hearing from you guys soon. Bye-bye.